In this video, I'm going to walk you through my buyer's presentation. This is the presentation that I do with every single buyer before we start working together, where I explain the entire buying process from start to finish so you know exactly what you're getting yourself into as a buyer. By the end of this video, you're going to know all the steps involved in buying a property in Montreal, but really anywhere in Quebec, to be quite honest with you. And if you have any further questions, I'd love to hear from you. You can book a meeting directly with me. The link is right below in the description, where I can answer any questions specific to your scenario and how we can work together to really get you to your real estate goals. So without further ado, let me break down how to buy a property in Montreal with me and my team. So this is our buyer's booklet. It's your first step towards a successful purchase. LG Realties is a boutique real estate agency that we opened up in 2013. And in the spirit of giving back, we've actually been donating money to Autism Montreal since 2022. We've actually donated over $40,000 since then. And it's one of the things that I'm most proud of. In terms of why I work with LG Realties, well, we're a team that's always improving. I'm constantly going to conferences. I have a business coach, I have a real estate coach. I've got coaches of all different styles to make sure that I'm always performing at my best and have the most up-to-date information for you. And I'm up to date with all the latest trends of what's happening in the market here across North America. And then I bring that back to my team, so we're always best equipped to help you with your real estate journey, whatever that might include. We're quick to respond. You can always book a call with myself or somebody on the team, and you're usually gonna have a meeting within 24 to 48 hours at the latest. We work together as a team. And what that means is that even when I'm on my paternity leave, for example, I have an entire team of people who are there covering to make sure that you always have somebody to support you, regardless of what's going on in my life that specific week. So it doesn't matter if I'm on vacation or if I'm away, there's always somebody to step in. And the same thing happens when you work with any other brokers on the team. There's always going to be somebody else who can pick up the slack and step in to make sure that you're fully supported when you're doing the biggest transaction of your life. That's one of the benefits of working with a team that has worked together for several years. We're a team that's reliable. You can check us out on Google. We've got over 200 5-star reviews, and that number keeps growing year over year. And I'm very proud to say that we have over 80% of our business that comes from past clients and referrals. What that means is that people clearly like the work that we're doing and the service that we provide, which is why they keep coming back to us and provide us their family members and friends to work with them as well, so we can provide that service to them. The last point I'm going to talk about is that we succeed. The reality is we help about 115 families year over year buy or sell real estate in the Greater Montreal Area. And with that experience, we're here to support you, because even though it might be the first time you do this, or it's something that you've only done once, twice, maybe 3 times over the course of your lifetime, we do this every single day, day in and day out. And because of that, all this experience that we've gathered is what we pour into you, our clients, so we can help you achieve your goals when it comes to real estate. Now, our purchasing timeline. So today we would typically be doing the initial consultation. I'm going to walk you through the presentation, and usually at the end of this presentation, I'd be asking you, well, tell me a little bit more about what you're looking for. We're going to break down what's important to you, your budget, specific things like that. I'd also whip out a calculator so we can look at a couple different budget options to make sure that your monthly payments align with what you're expecting. And from there, we'd be ready to start visiting properties, assuming you're pre-approved, or I'd put you in contact with a mortgage broker. As you can see, the second line item here is the pre-approval. So if you are already pre-approved, amazing. And if not, I'd send you a list of recommended mortgage brokers who you can reach out to get that pre-approval process going so we can start visits. Until we have a pre-approval in hand, we won't start visiting properties, because there is no worse surprise than falling in love with a property and realizing that you don't qualify for it. Next, we have the search. So like I said, we talk about what you're looking for, and I'd build a search for you so you can get automated properties going into your inbox every single day, depending on the frequency that you ask for, that meet that general criteria. Once we start visiting properties, we're going to enter our offer negotiation process. What this means is that we're going to start doing a bit of back and forth with the sellers until we can come to an agreement and an actual offer that gets accepted and move on to the next stage. Once we have that accepted offer, we move into the fulfillment of conditions stage. What conditions, you may be wondering? Well, one of the most common ones is the inspection. We're almost always going to inspect a property. I always recommend that you inspect a property whenever you're purchasing it. It's the largest investment you're going to make probably in your lifetime. I believe that you should have hired your own inspector to verify that property and see what the condition is of it. After that, we have document review. Document review is where we go through any documents associated with the property. This typically includes taxes, insurance bills, any recent renovation receipts, all sorts of stuff like that. Then we'll also have a firm mortgage approval during this conditions period. What that means is that even though you're already pre-approved, once we go see the bank with a specific property that we're looking to purchase, we will be getting a firm approval, potentially an appraisal done on this property to make sure that everything checks out and we're good to go on that front. After that, we've got all these things done. We're gonna have to schedule the closing. We've already decided the closing date in our offer. That's one of the points that we negotiate, but we're gonna have to schedule it with the notary, which means you're gonna have to choose a notary. So we'll help you. We'll send you a list of recommended notaries so you can work with them as well. We can provide references for just about everything to make this process as seamless for you as possible. And then finally, we believe in being present at every step of this transaction for you. So we'll be there at the notary to celebrate with you and congratulate you on the milestone that you're crossing. So when we're talking about financing, we have a couple different pillars that are super important to go over. The first one is the amortization. The amortization is the life of the loan. It's how long you're taking a mortgage for. The most common amortizations is the 25-year or the 30-year. So if you're putting less than 20% down and you are not a first-time buyer, as described by the government of Canada, then your maximum amortization is 25 years. If you are putting 20% or more, or if you are considered a first-time buyer, then you can amortize on 30 years. This is a recent change that was done last year, but it is very impactful in what your monthly payments are going to look like. The next pillar is the term. The term is how long you're signing a contract for with the bank. The most common terms that we see is the 3-year term or the 5-year term. You could get a 1-year term as well, or a 2-year. Sometimes we'll see those being some of the best options because of what's happening in the banking world with interest rates. But typically 3-year and 5 years where we generally see banks give the best rate versus duration. It's important to note that if you do break your term, so you try and sell the property before the end of the term, or if you refinance, that usually comes with some penalties that we can look into in a couple minutes. We've got fixed rates or variable rates. These are the interest rates that we're going to be signing. Let's start off with fixed. Very straightforward. You sign a fixed rate today, and for the life of the term, what we just saw a few seconds ago, so the 3 or 5 year period, that's not going to change. It's going to be fixed. Today, a fixed rate might be, let's say, 4% over the next 3 years. It might be 4.2% over the next 5 years. Whatever you sign today for that term that you agreed upon, that is fixed and won't change on you. So it gives you a lot of peace of mind. It gives you a lot of stability. However, if you try and break it before the end of that term, the bank's going to use what's called an interest rate differential to decide how much of a penalty you owe them for breaking that mortgage early. If interest rates have gone up, generally speaking, the interest rate differential is in the bank's favor, and therefore they're going to be okay with you breaking it. They're going to charge you 3 months of interest. If interest rates are lower now than the interest rate that you currently have, well, then the bank's going to be losing by giving up on this mortgage. Because of that, they're going to take the differential of what they should have made in interest over the life of your loan, or the term or a bit more so, and they're going to charge that back to you. It's not uncommon to see a penalty of $20,000 or $30,000 when you are breaking a mortgage early, depending on how much time is left on that loan. So it's super important that you are agreeing to this term that you are signing on, and that you do not expect there to be any changes, and that you are conscious that if you do make a change that you were not planning on doing, it's probably going to come with a hefty penalty. Next, we have variable rates. Variable rates, as the name suggests, are variable. They can go up or down depending on how Canada's economy is performing. Right now, in Canada, we've actually seen the Bank of Canada reduce interest rates twice this year, and this has been super welcome. We've really appreciated the reduction, but this means that the economy is not doing so hot. So the only reason why they're reducing interest rates is because our economy is suffering, and they're trying to inject a bit more capital and have people spending a bit more money. That's what we're seeing. So what does this mean? Well, variable rates are based on the prime rate of Canada. Today's prime rate is 4.7%. And most banks are going to give you a discount. That discount could be 0.5%, it could be 1%, it could be 0.8%. Let's use 0.5 for simplicity. So if I were to take a variable rate today and bank was offering me a 0.5% discount, well, that would be 4.7% less 0.5, that would give you 4.2%. That would be my effective interest rate today. Now, if prime rate were to go up, your interest rate's going to go up with it. And if prime rate were to go down, your interest rate's going to go down with it. When we are talking about variable, there's 2 types of variable rates. There is the fixed payment, which means that your payment won't go down, but your capital won't go up or down, but the capital portion is what will be adjusted depending on how the rates impact it. And then there's variable payment, which means that if interest rates go up, well, your payment's going to go up with it to account for this new interest that you're owing to the bank. So it's important to note these differences. There's a lot of nuances when it comes to this. I will always recommend that you speak to a mortgage broker, but again, with 17 years of experience in this field, I'm more than happy to explain these different nuances and sometimes just present it in a different way to you so that you have a bit more information and sometimes feel more comfortable with it. So again, if you want to book a call with me, feel free to book it. The link is in the description down below. I'd be happy to discuss your specific scenarios with you. Next, an insured mortgage. In Canada, whenever we put less than 20% down, we need to get an insured mortgage. Now, the insurance isn't for you exactly, it's to insure the bank. And why are we insuring the bank on a loan that you're taking from the bank? Well, when you put less than 20% down, the banks consider this a risky loan. I'm using risky in air quotes because it doesn't mean that you're a bad person. It doesn't mean that you're not going to repay the loan. It just means that there's a bit more risk for the bank. In order to hedge that risk, we've created a couple of insurance agencies that will sell you an insurance policy so that if you default, the bank is protected. You're not so much protected, but at least you get to buy a property with less than 20% down. And that's what this gives you access to. Now, who does this? There's 3 companies in Canada who do this. You've got Sagen, you've got Canada Guarantee, and you've got CMHC. CMHC being the biggest one of them all to do this. All right, our commitment to you. So as of June 10th, 2022, the OACIQ, which is the organizing board that supervises all realtors in the province of Quebec, has changed the way we do things. We were previously allowed to have what's called a contract, if you will, a brokerage contract to purchase, which allows us to represent buyers. That was verbal. And basically, you say, hey, you're working with me. I'd say, fantastic. I'll be your realtor. We had a verbal agreement together. And with that, I was allowed to represent your interests. I was allowed to go find you properties that were not on the market. I was allowed to send you comparables. I was allowed to share my opinions with you. I was allowed to effectively represent your best interests. I was your realtor. You hired me. Off we went to the races. Because of a couple things that they wanted to correct, primarily being the fact that whenever I sign a listing agreement or any realtor signs a listing agreement with a seller, they sign it at a commission, let's say 5%. And on that listing agreement, we say that they're going to pay a collaborating broker or a buyer's broker 2.5%, simply put. Now, what happens? Well, at the end of the transaction, the seller is the one writing the check for the entire commission. Because of this, the OACIQ said, wait 1 second. If a buyer is coming and he does not have a contract with a realtor who's coming to represent him, well, if the seller's the one who's paying the commission at the end of the day, and the buyer's broker didn't have a contract with the buyer, well, that broker should technically be representing the best interest of the seller because the seller's the one paying him. So, in order to circumvent this and make sure that everyone understands who they're actually representing in a transaction and who's working for who, they said, well, if you want to represent with a buyer, you want to represent them properly and really make sure that this is clear and make sure that you're representing their interests, you need what's called a brokerage contract to purchase with this buyer. All over North America, this has been super common for many, many, many years. It's a buyer's agreement, a buyer's representation agreement, it's whatever you want to call it, depending on the state or province. But in Quebec, this was not something that was common practice, simply put. So since then, we now have what's called the BCP, and it's now something we use with every single transaction. In order for us to be able to represent you, share our opinions, give you insight, work for you, and represent your best interests, we require this contract. Once we start working together, we fill it out. We basically put what type of property we're looking for, in what areas, what are the important characteristics, what's the budget, and we put this all together into the contract. And with that, once it's signed, we're allowed to actually represent you and do all this work for you. Organize all visits for you. We're going to tour all the properties together. We're always going to be present for these tours. We can give you our opinion, our insights throughout the visits. We'll point out the pros and cons of every single property. We'll help you come up with some construction estimates and some ballpark figures to give you an idea if it's going to enter your budget or not enter your budget. We'll pull comparables to make sure we understand what market value for the property is, and we'll guide you through all of the legal contracts. Again, always keeping in mind your best interests. Now we've entered the offer negotiation process. So we visited properties, we fell in love with the property, we're ready to write our first offer. This is a super exciting time in the process. What do we need to decide? Well, first we have to decide what we're going to offer. How are we going to decide that? Well, my team and I are going to provide you with the sold comparables. We're going to analyze them together, and we're going to say, we believe the home is worth this much money. With that, you're going to decide what you want to pay. You might decide that you want to pay $15,000 less than that because that's what makes sense to you. You might say, LJ, I cannot live without this property, so make sure that you write the offer at whatever price we need to write it so that we get it. That might be $15,000 above what I think the property is worth. With that, we're going to make a decision. Ultimately, you're going to make the decision to what price you want to go into, but that's going to be part of our offer. The next thing we have to decide is what conditions we're going to include. Like mentioned before, inspection, document review, potentially a new certificate of location, financing, and a bunch of other things that we can add that are really case specific depending on what type of property we're looking at. Next, we're going to decide on when we want to become the owners, so go to the notary, and when we want to take occupancy. Sometimes it's on the same day, sometimes there's a couple days between them, sometimes it's a couple months between them. If it's a couple months, we're going to decide how much rent we're going to charge the seller for occupying the property over that period of time. Finally, we're going to decide how long we're going to get the sellers to respond to us. In this market, generally speaking, 24 hours is the most common practice. 24 to 36, sometimes 48 hours, depending on if the sellers are away or difficult to reach, whatever it might be. But usually next day, 8 p.m. is what we're going to do for most offers in terms of the response deadline. Okay, great. So now we've submitted the offer and the vendor has 4 possible responses that they can give us. He can accept our offer. Woo! We love it when that happens. They can counter our offer. I like your price, but not so much your dates, or I didn't like your inclusions, whatever it might be. They can counter us. They can refuse our offer. Well, it's really unfortunate, but hey, they might decide that we're too far apart in price or the dates just simply don't work, whatever it might be. They can refuse, or they can simply not respond, which is the equivalent of a refusal, and we can either make a new offer or we can find another property, whatever seems to be the best course of action for us then. It's important to note that when we are offering, in this process, we have what's called an initial offer or a multiple offer situation. What's an initial offer? Initial offers when we're not competing against anybody else. We're the only offer at the table for the vendors, and therefore we're expecting a negotiation. We're going to be able to do a little bit of a back and forth to negotiate to come up to the best price for you, maybe the best inclusions, whatever that might be. In a multiple offer situation, it's important to note that the vendor is going to look at the 2, 3, 4, 5, however many offers he has all together at once, and they're going to pick the best offer for them. That means we're only going to have one kick at the can. What this means is that we're not expecting a negotiation. We're going to go with our best and final. And if we get it, fantastic. And if we don't, that's okay. There's going to be other properties too. But it's a very different approach when drafting an offer when we're in multiples versus when we're doing an initial offer. Throughout this, we'll be here to provide you professional negotiation skills. And what I mean by this is that this is going to be a very emotional process for you. And we're going to make sure that we can keep your emotions in check throughout from start to finish and make sure that we're always keeping a level head with pricing and with what the property is actually worth and if it's worth going to the price that they're asking for or making the concessions that they're asking for in this negotiation. We'll be very objective because ultimately we only care about your best interest, and then with that information, again, you're in the driver's seat. You get to decide where we go from there. After that, if you did need to make an offer that was conditional to the sale of your home, we could also do that. So if you currently have a home and you need to make sure that we sell it in order to be able to afford the next home, we can draft an offer that is conditional for that to happen in order to get to this next home. All right, in the conditions, we've got a couple different ones. The first one is financing. On that financing condition, the offer will be conditional to us getting financing approved for this specific property. And the biggest caveat there is typically the appraisal. We know that you're pre-approved, so we're not really concerned about you being able to afford the property, but sometimes it happens, usually happens 1 to 3 times a year for our team, that the appraisal comes in below the accepted offer price. Now, when that happens, we have a couple different approaches, and I think I did a whole video on appraisal, so we'll try and put a link somewhere. If not, feel free to go to my channel and find it, but effectively we're going to challenge it one way or another to make sure that we can get it to the right price, or we can take a look back and see like, hey, I probably presented you that we are going in above what it's worth, and you decided you were willing to do that anyways, and you're willing to pay that delta of down payment to make up the difference if necessary. Once we do have that, we'll have 15 days to get that approved. Once we have that in hand, we're good to go on that front. The next condition that we typically have on most of our offers is a document review. Depending on the type of property that we're looking into, we're going to have different things that we're going to ask for. If we're looking at condos, we'll be looking for the declaration of co-ownership, the bylaws of the immovable, the RIS, or the request for information from the syndicate, which is actually now kind of shifting over to an attestation. As of August 14th, all co-ownerships have to provide an attestation, so we're asking for that more so. But nevertheless, a form basically explaining if there's any lawsuits, how much money the building has right now available to them, if there's any problems that we should be aware of, stuff of that nature. The asset management plan is a super important document that shows us what work's going to be needed on the property over the course of the next 25 years. The minutes from the meetings of the co-ownership and the board. This shows us what's happening in the building. Are people getting along? Are they not getting along? Where are they heading? Etc. Financial statements. What's happening with the money? How's it being spent? Etc. over the course of the last 3 years. If the property is rented, any leases for the property that we're looking at buying. The tax bills, the insurance bills, the hydro or utility bills, and any recent renovation receipts available. If we are looking for a single family home, I'd be looking for a lot less stuff because it's not part of a co-ownership. We can scrap all of that part and really just focus on the leases if it's rented, the taxes, the hydro, utilities, recent renovation receipts. And then again, for investment properties, same as for houses, but we're gonna do a little bit more diligence on all of the leases, any cases at the rental board, stuff of that nature, is anyone not paid, stuff like that. The inspection is not a get out of jail free card. And a lot of times people think that they can use it as that. The clause, which is clause 8.1 on our promise to purchase, is very specific that we need to have a significant issue or a major issue with the property in order to renegotiate or walk away from the purchase. Now, significant is difficult to interpret, so we try and figure out, well, what's significant for you versus for me, or what? From what I've read recently, jurisprudence usually says that a significant issue is typically an issue that's one singular item worth, give or take, 3% of the purchase price. So if I stick on this $600,000 example that I have, that means one issue that's worth about $18,000 that we were unaware of, that was not declared to us, that was not easily seen during the visit, that we had absolutely no way of knowing about. If it was declared to us, if it was provided to us, it doesn't fall under the inspection. It's already been revealed. What does this mean? That for us to be able to walk away from an inspection, it means that we're gonna have to find something pretty big, pretty important. We're talking structural, we're talking foundation, we're talking contamination, we're talking stuff of that nature to walk away. It's normal to understand that most properties we're gonna look at are gonna have maintenance things to do. Homes, properties, they're living, breathing organisms. They need maintenance. It might be caulking, it might be some joints, it might be fresh paint, it might be some surface mold, it might be all sorts of things that are relatively simple fixes and come with common maintenance. But those aren't significant, those aren't major. We will not be able to walk away for things of that nature. And if you think you can walk into a property and just, oh yeah, I'm gonna nickel and dime them at the inspection, that's not legal. The vendor reserves the right to sue you for not moving forward on the transaction if you do not have a significant issue that you're using to walk away. I like to make it crystal clear that we really need a really big, important problem to come up in the inspection for us to be able to walk away. That does not mean that we're not going to try and renegotiate things if things do come up. We're going to have the conversation with the seller. We're going to say, hey, look, the pipe needs to be cleaned that's going to the main stack, to the drainage. Can you please take care of that, or can get a reduction for that? We weren't expecting to have to do X and Y work. We'd like to get compensation for that. Now, the seller reserves the right to say no, and if it isn't in that kind of significant range, then we can't walk away because of it, but we're always going to try and renegotiate to get you the best deal possible. Additional to the inspection, there's a couple different tests that we recommend as well, depending on where the property is located and stuff like that. If we're in the Laurentians, or if we're in the area that doesn't have municipal water and sewage, we're going to want water quality tests, and we're going to want to check the septic tank. If we're in an area that's known for pyrite, we're going to want to make sure that the property has lower levels, or that we're not concerned for any movement or settlement because of the pyrite. If we're in an area that we know used to be maybe a contaminated site, a gas station, the property may have had an oil spill, stuff of that nature, we're going to want an environmental test to make sure the property's clean and we don't have any issues down the road. If the property has older plumbing, we're going to want to check the drainage. What I mean by check the drainage is we're going to have a drain specialist or a plumber come by, and he's going to run a camera through the drains to see the state of them. A lot of the plumbing in Montreal was built in cast iron originally, and cast iron is amazing, but it rusts from the inside over time. We've got plumbing that is 50, 60, 70 years old. With time, it has started to rust, which is totally normal. It's gone past its useful life, and it needs to be replaced. But the only way to know if it's actually rusted and if it shrunk on us is to pass the camera. That's why I recommend the camera drain inspection. Fantastic. Now, we've gone through our due diligence. We're super excited. We're really happy about this purchase, ready to move forward to the next step, but we got to get ready for the notary appointment. There's a couple things we need to do in order to prepare for the notary, and these are this. The first thing is we have to contact our insurer, because we're going to need insurance at the time of purchase. If you're getting a mortgage, you absolutely are required to have insurance. If you're not getting a mortgage, even though it's not a requirement, I cannot sleep easy at night if you do not have insurance. So please make sure you reach out to your insurance company to get your insurance booked. You're going to have to reach out to the service providers for utilities. So who's that? Hydro-Quebec, Énergir, Hydro Solutions if your hot water tank is rented, and your TV internet provider so that you don't skip a beat. Next, you're probably going to have one more meeting with the bank to sign any final mortgage details, finalize rate if it's reduced, anything like that. And then you're going to have 2 appointments with the notary. The first appointment is going to be to sign your mortgage deed, and the second appointment is going to be to sign your deed of sale when you actually become the owner. We'll be present with you at the signature of the deed of sale when the time comes. In terms of testimonials, like I mentioned, I got over 200 5-star reviews, and I can't wait to make you another 5-star review on our Google page, because we're always working and accepting new clients. It's our goal and pleasure to work with as many families as possible in the Greater Montreal Area to help them buy or sell real estate. And if you are looking to rent or invest, we do that as well. Our team is multifaceted. We also have our sister company, Plex, which is a property management company that I own that allows people to really become financially free when they can make real estate income passive by passing along all the headaches of management to a company. That's what we're here for. That wraps up my buyer's presentation. I hope that this has been super useful to you. This is the presentation that I do for every single buyer. Like I mentioned earlier, now is when we go into the specifics of your case. I would do a full budget analysis with you. I'd be more than happy to do this with you if you're thinking of buying or investing in the Greater Montreal Area in the next couple of years. And like I said, if you're unsure if you're ready to make the leap, this is the best meeting that you can book, because with this, we can come up with a plan to see if you're ready or ensure that you become ready in the soonest timeline that you're looking to do it. So please, the link is in the description down below. I can't wait to meet with you in the future. And if you've enjoyed this, check out some of the other videos that I have in my channel. Thank you so much for watching, and I look forward to catching you on the next one.